Good morning, I'm James Lopez, President at HomeFi Corporation, and this is today's mortgage and real estate market update. Now we'll jump right into the mortgage bond market. Mortgage bonds are down about 19 basis points at the time of recording. The 10-year yield is up about 1 basis point. And remember, we said yesterday that some of the market movement was going to come from a joint conference where Fed Chair Powell was speaking alongside the ECB President Lagarde. The president of the San Francisco Fed actually beat him to the punch yesterday morning. Daly is her name. And Daly gave an interview with Yahoo Finance, and that really started the motion in the market for bonds to kind of sell off a little bit yesterday, and for the stock market to kind of slide a little bit yesterday as well. And what she talked about was that she expects the Fed to raise the Fed fund rate by 50 basis points at this next meeting, and possibly a couple more meetings. And what it really means is that the Fed is getting more aggressive on their fight to curb inflation. Inflation is a problem, and everyone is seeing that and knows that. So the Fed is trying to get a little more aggressive on their fight against inflation, while also trying not to throw the economy into a recession. And it's a tightrope that they have to walk. The Fed does, and she said in her comments she doesn't see that the economy will go into a recession. But there are many other people that are saying that it very well could, and some even saying that it should, in order to slow down inflation. Now, what does this all mean for the bond market and ultimately mortgage rates? Well, let's start with mortgage rates today. Mortgage rates are going to open probably where they left off yesterday. Could be slightly worse just because we're opening down, but probably around the same place where they left off yesterday, after some repricing for the worse throughout the day yesterday. It's not a big news day today, so there shouldn't be a ton of market movement as a result of news. There could be other technical factors that move the market, but news shouldn't really move the market today. And so again, what that means for mortgage rates is that mortgage rates should stay pretty flat today. Mortgage bonds are testing floor support. Even right now as we speak, they're testing this floor support. They've bounced off of this floor support a couple of times, and it looks like that we spoke about it earlier this week. It looks like mortgage bonds could be forming a foundation or a base to kind of consolidate and give a base to improve from, kind of slow or decelerate that downward trend that the mortgage bonds have been in. And coming back to interest rates, what that means is that if that continues and we see a base kind of forming, does mean that interest rates should level out and not continue to increase like what we've been seeing over the past couple months. All that's yet to be seen. We'll see what happens. But when it comes down to the idea of fighting inflation, like I said, everybody knows inflation is a big problem. It continues to be an issue. Supply chain issues across the globe are continuing to be a problem for business, for construction, specifically in real estate. There's lockdowns in China over COVID that's continuing to magnify the supply chain issue. You've got the war in Ukraine that's causing somewhat of an energy crisis, so to speak, or just global uncertainty in how energy is going to get to the rest of Europe and all that kind of stuff, and where the oil and things like that are going to come from. So all those things are pushing on inflation and kind of pushing it up. So what happens is whenever the Fed raises their interest rates and curbs inflation, why it's good for us, because we've talked before, inflation is the enemy of the bond market, and specifically for us, we're looking at mortgage bonds. Inflation is the enemy of bonds. If inflation goes higher, the bond is worth less, and the yield is worth less. So as the Fed fights to curb inflation, that makes improvements for the bonds. It makes the bond more attractive. Should bring back some more demand for the bond, and eventually give us a place to where we start to see some improvement in mortgage rates, instead of this continued worsening. And so it may not seem like that, right? It may be counter to conventional thought, but as the Fed raises the Fed fund rate, it fights inflation, helps the bond market, ultimately helps the mortgage bonds specifically, and then we could see some more demand for the mortgage bonds and interest rates start to come down. Now, time will tell, right? And that's all we've got is time. Time will tell, and we'll see how it all plays out. It's not something that's instant or overnight. We'll see how this all plays out coming into the summer months, throughout quarter two and coming into quarter three. Now, in the meantime, the real estate, housing market's got its own supply and demand issues that we're dealing with, right? There's such limited inventory, and we know that that's kind of slowed down transactions, the number of transactions that we're seeing, and everything as far as the industry goes. But we see a lot of positives in the housing market. Number one, home values are high because of that low demand. There's more first-time home buyers, or at least trying to get into their first house. Like we said last month, first-time home buyers ticked up in the number of purchase transactions that occurred for existing homes last month. Now, even though construction's a little bit on the slower side and supply and demand issues, we still see a lot of positives in the housing market. And really, one of the biggest positives that's coming from it is that homeowners across America are building wealth through home ownership. And for us in the industry, whenever we talk to prospective buyers or borrowers, customers, that's the one thing that we can always point to when we talk to them and say, listen, when you buy a home, you have the potential to invest in yourself and your family and build wealth through home ownership. It's one of the biggest benefits of home ownership. Now, that's all the news that we've got for today. Jobless claims did come out yesterday. We're going to post an infographic on jobless claims over on Facebook, so be sure to go over there and check that out. Like, comment, and subscribe to our YouTube channel. We'd love to hear from you. Again, this is always an open discussion, so whatever it is that you want to hear us talk about, or if you have any questions about the things that we do talk about, please leave a comment. We'd love to hear from you. Hope you have a wonderful weekend, and we will see you on Monday.